Hey, gang. Today I'm going to talk about buying a house with delinquent or defaulted student loan debt in the 2020 economic collapse. In other words, if you have a student debt loan and and you can't get a loan from a bank, I'm going to show you exactly the strategy, the secret that I've been using since the last crash, which was 2006, fourth quarter, to get into the game of buying houses without using my own money. So in this episode, I'm going to talk about buying your first time home or an investment property without using a bank, without using credit, even if you have massive amount of student loan debt, or even if you have defaulted on your student loan debt, because I'm going to show you the secret of getting deals called OPM, other people's mortgages, in this episode. Now, first, I'm going to give you a little background education so you understand how it works. All right, sorry guys, I'm live and unscripted, so things happen. So first, I'm going to talk about how some background education on how it works. Two, I'm going to get into the OPM, the solution of buying houses, even if you have student loan debt, if you default on student loan debt, if you have too much student loan debt, it doesn't matter, and where to go find these deals. It looks like the wind doesn't want to work with me, so I'm going to retry again. There we go. Let's see. All right. So that's the great thing about going live is that everything's unscripted. I speak from my heart. All right. Now there's two ways to buy a property in America. The first way is the traditional way, and I'm going to quickly run through it. The traditional way is divided in two parts. The very first one is what's called bank loan, government backed programs, where the government will guarantee the bank money if you or the borrower defaults. Okay, so those programs are FHA, okay, they're VA and USDA. If I'm not mistaken, the last one, USDS, doesn't matter. These are government backed loan through Fannie Mae, Freddie Mac, and they're really good for the home borrowers because most people don't have the other option to buy the home, which is called the conventional. A conventional, what a bank's going to look for is 20% down, good debt to income ratio, and you got to have a pretty good credit score, FICO score. Where on a VA or FHA, you don't have to have the whole 20% down. And then there's also programs like down payment assistance programs from the states that can contribute to it. Now, the benefits of getting a VA or FHA is that you don't need to have all the money, but there are cons with it too, like you have to pay PI insurance, which basically covers covers you in case you default and pays the bank. Now, in a situation when someone has student debt and they are delinquent or they have defaulted on it or they have too much student debt, then sometimes you're not going to be able to qualify for FHA. And if they're not a veteran, they're not going to be able to qualify for a VA loan. Now, these things are good because I've seen home sellers that are in the VA program and they bought homes in this bubble with no money down. Okay. Now, but on the other hand, they're in big trouble because their home has no equity in a down market. Okay, today was just announced that the home pending sales prices are 21% down in March, guys, and this is just the beginning of this economic bubble, housing bubble that we're experiencing. So the traditional way are government-backed loans, FHA, VA, and conventional loans, which a bank will allow someone a mortgage if they have 20% down, good credit, etc. Now, I'm not talking about these options. The option that I'm talking about is what's called OPM, which represents other people's mortgages. Again, other people's mortgages. Because in 2020 economic collapse, there are so many people that have mortgages and they've lost their jobs or they can't go to work or they can't open their business. And what's going to happen is there's going to be a tsunami of foreclosures, a tsunami of motivated sellers, and what OPM does is optimize or capitalize on the environment, which is the environment is we have fear in the air, we have blood in the streets, and everyone's scared, and everyone's phantom equity, that's what I call it, if it's in the stocks or if it's in their homes, is evaporating. They're just taking it away. Okay. All right, guys, if you have any questions, leave a comment. I'll be happy to answer those questions for you. So, if someone has a student loan debt, which is too much. For example, I know so many people that have $160,000 in student debt, and they're not even a doctors or attorneys. They just have multiple master's degrees or a PhD, whatever. Okay, or if someone is defaulted on their student loan debt. Okay, which means they're not making payments anymore. They're saying, "Man, screw this, man. You sucker me into this," because many people have student loan debt and they're working at Starbucks or they're working at, you know, being a waiter, or they're not getting the amount of money that they thought they were going to get when they got the sales pitch in high school. But I'm not going to get into that. That's a different story. That's why I did this video, because, you know, as a smarter guy said, civil disobedience is this is one way where, we could say screw the bankers and do the same exact thing that they do, which is called fractional reserve lending, where they lend money that they don't even have. So OPM works exactly like the same way the bankers do, but it doesn't include the bankers. Why does it not include the bankers? Because these homeowners, they're what I call motivated sellers. They're in this era, 2020 going forward, they already have the mortgage from the bank, but now they're in trouble for whatever reason. And it doesn't mean that they have shitty homes. It means that you're going to find all kinds of homes. You're going to find mega mansions, penthouses, all the way down to entry level homes, all the way down to commercial. Depends on what you're looking for. But if you're looking to buy your own very first home, and this is not a financial advice. I'm not an attorney. I'm not a CPA. Let me put that disclaimer out. This is a strategy that I used back in 2006 for my own first personal home. I used a strategy called OPM, using other people's mortgages. And simply put, what that means is I marketed, I found a motivated seller, I talked to them, and I give them an offer. Look, I know that, for example, you're 2 months behind on your payments. I'm willing to make those two payments up and then continue making the remaining payments. If I could do that for you, would that work for you? If they said yes, then it's on like Donkey Kong for me if I wanted to buy this home for myself. And that's exactly what happened. I found a beautiful home from a city worker, okay, city worker, and him and his wife were going to a divorce and they couldn't make the payments on the house anymore. And all I did is I just stepped into the seller's shoes, made the payments. The seller then forked over the deed to me. In other words, he conveyed the deed to me, the title of the property, and I was the rightful owner of the property, even though the debt was under his name, under his back, under his social security, which he knew up front when he got into the situation because all the paperwork disclaimers. All right, sorry guys. Glad we're still on. Click the like button. Click the like button live, unscripted. Do you have any questions? Leave a comment below. I'll be happy to answer for you. All right, so going back to the story, the seller was motivated because the market had changed. He tried to sell his home. He wasn't able to. He was going to a divorce. And, I just started making the payments. And I own the property. So if you're in a situation or someone is in a situation, they can't get a traditional loan because they have too much student debt. They've defaulted on student debt. I don't think that you should lose hope, because if you educate yourself enough, there are other paths that are not traditional. Now, majority of real estate agents are not going to understand this. Majority of title companies are not going to tell you this because they don't want to do it this way because it increases that liability. And most attorneys that are just what I call general practitioners are not going to know the ins and outs of this, and they're not going to know this either. Only a sophisticated investor slash attorney is probably going to be able to help you out, or someone that's an attorney and they're board certified and they just do real estate transactions and they understand the commercial, they understand how to create new notes, and so they can do it. So if you just ask that general attorney, they're going to tell you no, because that's what happened to me. I asked general attorneys, they said no. I asked the real estate agent, they said no. I asked the title company, they said no. Until I started doing my homework, and more I found an attorney that would do the closing for me. I found title companies that would do these transactions for me, but they were not your average title companies, or not your average attorneys, which means that if you want to use these strategies, you can't be the average person. If you're the average person, then you're not going to know these strategies. You're going to go the traditional way, which is basically, what majority of people in America do. And there's nothing wrong with that. This whole industry is based on people profiting from that, from bankers making loan generation. Even though they don't hold the notes, they sell it on the secondary market in mortgage-backed securities that people all over the world, investors, buy into it. Okay, they have nothing to lose and they make all this junk money. Plus, they're insured to the FHA, VA, or government-backed programs. So, if you are smart enough, or if you have a will, then America is a great country because you can do it not traditionally. For example, most people that started a business in America, they borrowed money, right? I've started all my businesses with $100, and that's it. No credit cards, no debt. So is it possible? Absolutely, right? But it will require creativity and imagination, where the other way does not. Okay. Now going back to the story, I talked about the traditional ways of getting a loan, where if you have a lot of student debt or you're defaulted, those are not going to work for you. That's why you're probably here. Then the other way, the solution is OPM, other people's mortgages. And the way that works is that I'm targeting a certain type of sellers. Every seller is not my audience. My audience are what I call motivated sellers. Okay, they got to be motivated. Okay, why do they have to be motivated? Because this option that I'm providing them is not their best option. It's what I call their best worst option. Okay, because there are worser options out there. For example, letting it go to foreclosure. Right? That's a worse option because that's a black eye for 7, 10 years. Letting it go to bankruptcy, which now is two black eyes, one for foreclosure, one for bankruptcy. So the solution that I provide to the seller by OPM is not their best option. Their best option is to hire a real estate agent and then sell it on the MLS to the retail buyers. But unfortunately, in the 2020 economic collapse, in the housing bubble 2.0, they're not able to do that. They're not able to do that. Just today came out reports that March, 21% of pending houses, which is the MLS, was down. 21%. And this is just the very first 4 to 5 weeks of the economic collapse that's happening. Okay. Now, the best way for a seller to sell is to go with the real estate agent. But in this market, when banks are pulling back credit card limits, when they're pulling back mortgage requirements, where now they're requiring you 20%. They got to have 700 plus credit score, unlike 2016, unlike 2014, unlike 2012, etc. Okay. Now there's less buyers out there. Now everyone listens to the news, listens to the TV, listens to everything, and they have so much fear because all the information out there is negative, 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 where they're programming, they're monetizing, not monetizing, they're polarizing the people's mind. So a seller is going to say, look, yeah, I don't have any options. I'm just going to go to foreclosure. I can't make the payments. And what the programs they have right now, like the forbearance program they've rolled out, is even going to increase the problem a lot more than they realize, because they had the same exact problems like programs like Hope in Obama era, where I was a real estate investor since 2006, fourth quarter, and these programs didn't help that many people. I've done everything from short sales, loan modification, buy houses for cash, uh, subject to OPMs, all that stuff. And I can tell you, majority of these programs do not work because the banks are going to get paid from the government, Fannie Mae or Freddie Mac, in these loans, so they had no interest, and nor could they modify the loan, or because guess what? They didn't hold the note. They had wrapped it up in mortgage securities, sold it on Wall Street to investors all over the world. So they were not the investors of this. They were just the middleman. Okay. So if someone has student debt, someone has defaulted, there are other options out there, but it require you to put information. It will require you to get certain type of skills that you don't have. You're going to need skills from marketing. You're going to need skills from talking to sellers. You're going to need skills from negotiation. You're going to need skills from structuring deals. So I do have a couple of solutions for these problems that I just mentioned. Before I get into where to go find these sellers, okay? If you need someone to help you, if you're looking to close your own personal home or you're looking to get an investment property and you need someone to ask questions, someone that's been in the game, someone to shadow, then consider joining my profit sharing. It's not for everyone. It's $3,000 for one whole month of coaching. I help you. Plus, I give you all the tools you need from how to give offers, how to generate these leads for free, how to find these sellers for free. So much. $9,500 of free tools that I give you whenever you join the profit sharing. Go to mrnofluff.com. Join that. If you're not in that situation, you don't have that cash, I totally understand. I'm a refugee to America. If you're looking for self-help book, then go to mrnofluff.com. I have tons of different books on how to buy the properties OPM called Subject to Investing, how to find it. Everything you need, you can buy like a little at a time, whatever you need it today. You don't have to buy everything at one time where it's going to cost you a lot of money. You can, for example, right now I have my Ninja phone script. You can download that. That teaches you how to talk to sellers because in the program OPM, other people's mortgages, subject to investing, owner financing investing, these are all the same. Okay. The most important person is the seller, and they're the decision maker because in this type of transaction, I don't need a bank approval. I don't need an inspection approval. I don't need an appraisal approval. I'm the decision maker and the seller. So knowing how to talk to a seller is so crucial because you're not going to get the deal. So right now you can download it at Mr. No Fluff. It's called my Ninja phone script. You'll see it. I'm having a flash sale. There's only 2 left at that price. So go up there, check it out. So if you need help, there's 2 solutions that I provided to you. Number one, you can get in my profit sharing. It's 3K, 1 month of coaching. I help you. I answer all your questions to help you get these deals. Or you can go to my website and download these self-help courses where I let you download my brain, right? For pennies on the dollar, right from the comfort of your home, you can learn how to do this. And in 2020 claps, if you want to be a first time homeowner, if you want to get your first time real estate investing, in my opinion, I'm not a financial advisor. I'm just a refugee to America, a guy that turned $100 into multi-millions and then give it all up because I was tired of accumulation. It didn't make me happy. I bought into the American dream of consumption, right? And it didn't make me happy. So I give most of my stuff to the homeless. But I could tell you, this is the way I did it was in the last crash, I bought properties where I didn't get a loan from the bank. I didn't have to put 10, 20% down because all I had to do is pay the seller's closing and just take over their mortgage. Some of them had good mark equity, some of them had marginal equity, some of them had no equity, some of them even have negative equities. But my very first deal, it didn't matter because I was going to live in it, right? And it was a way less money that I put into it if I went to a bank and got a loan and I had to put 20% down, pay all the loan generation fee, all the filing fees, all the stuff they charge me for closing, thousands of dollars. I got to control all of that. And that's why I'm sharing it with you because there are other ways if you're willing to educate yourself. Now, just like anything, you're going to have to put the time and education to do it yourself. Or if you want to do it faster, then get into one of my programs and let me help you. But 2020, in my opinion, is the best time to buy real estate because there's going to be so many motivated sellers out there, ladies and gentlemen. What is a motivated seller? Someone that's going through tough times. They can be going through tough times emotionally, like someone that's going through a divorce, someone that has death in the family, like someone that has lost someone because of the sickness bug right now, right? And they can't deal with it. Or it can be financially, which is a lot of people in the 2020, 2021 coming up. They're going to be financially motivated. They had great jobs. Now they don't have a job, but they still have the mortgages. They still have the RVs. They still have the trailers. They still have the cars. They still have the student mortgage payments. They have all this stuff to pay, but they don't have income coming in. And now all these people, guess what? They borrowed money at ultra low. That's what happens when you go live unscripted. Okay. Um, Ultra low. These sellers borrowed money at ultra low interest rate, ladies and gentlemen. Ultra low. What do I mean? Well, interest rates have never been so low in the history of America, okay, ever on mortgages. Now people bought mortgages, 30-year mortgages, 3%, 2%, right? Where back in 2006, people were getting mortgages for 7%, 11%, 6%. You see what I'm saying? And rents have gone up. So right off the bat, if someone's not looking for an investment, they're looking for an investment property, not looking for their own homestead, then this strategy OPM is even awesomer than that, because there's sellers out there. There's so many sellers out there. Just 2 weeks ago, I brought it to you that Airbnb superhosts are going to be in trouble. Today, we see at Wall Street Journal reporting the same thing that I brought to you 2 weeks ago. So this shows you how ahead of time I am than most of the people out there. I predicted the economic crash back in 2016. I told everyone gold was the play when it was $1,100 an ounce, right? Not financial advice. It's just what I'm doing, my opinions. And people laughed at me. And now here we are. Gold is almost 1,900 bucks. If you now on the spot price is lower, but if you want to go and buy one at the gold shop, they're going to charge you almost 1,900 bucks, 1845, 1850 varies, right? And real estate, again, today's report came out that 21% of pending homes on the MLS is down 21%, and this is just the fourth to fifth week of the situation. Imagine what's going to happen in 2 years, right? Because we're not going to be seeing a U shape. Now, on the stock market, we may be able to see a U shape because there's so much manipulation, but on the main street, the average person is going to be suffering. And you can see the bread lines, you can see the food lines happening all over America where people have to line up to feed their kids. Okay. Well, guess what? All these people have massive amount of debt that goes with them. And some of this debt is good debt as I don't think there's good or bad debt. I think all debt is bad unless you're able to get positive cash flow from it. Okay. That might be a better deal, especially if the debt is not even under my name. It's under someone else's name, which is the best deal for me because I don't like bankers and I don't want to borrow money from them, but I'm willing to take over someone else's debt when someone runs my credit, I don't have any debt associated with me. The seller does, and I disclose that to the seller. Their attorney discloses to them, the title company discloses to them, and they're okay with it because again, it's their best worst option. There's worser options out there like foreclosures, like bankruptcies, where they get two black eyes. In this situation where I meet a seller, he's distressed, he's motivated, I take over their payments, like I did with a seller named Carlos, but I won't say his last name, right? I took over his payments 5, 6 years later. They wanted to buy a home. It helped them. It helped them that I took over his payments because now he was able to buy another home because if he had gone to foreclosure, he would have been able to qualify for another home. So by me providing records to the new lender that look, that responsibility, that liability is not Carlos's, it's mine. And I'm making monthly payments for many years on it. And here's the bank statement that shows where I'm making the payments. It's not his liability. He was able to qualify versus him letting go to foreclosure. That's why at Mr. Investor, I always say, I'm saving the community one home at a time. I can't buy everyone's home, right? I just can't. I don't want to, right? But the people that I do help out, I'm really helping to create a win-win situation because the other thing that is going to go happen if I don't buy their home, if I don't have a solution, is they're going to go to bankruptcy, right? They're going to go to foreclosure after that, okay, or foreclosure and no bankruptcy because they didn't have $5,000 to $7,000 to file for bankruptcy, which eventually is going to lead to foreclosure anyways, okay. So it sounds like a clown show. You're just dishing up money. End of the day, you get two black eyes when people do bankruptcy, but this is not legal advice, financial advice, none of that stuff, ladies and gentlemen. These are just my opinions and my experiences as a refugee to America, where I bought houses that I lived in and I bought rental properties using other people's mortgages. Now, let's talk about how to find these sellers, okay? Because your average seller is not what you're looking for. Someone that just wants to get top dollars is not what you're looking for. Now, everyone wants to sell at top dollar, okay? I mean, it doesn't make sense. Like, if I'm motivated and I'm going through a divorce and I really need to sell my home, I still want to get top dollars. But it's a difference of wanting to get a top dollar and you have to get a top dollar. The people that have to get a top dollar, like they're sticking to their guns, they're not my customers, okay? I'm dealing with people that like to get a top dollars, but they also realize that they're in a situation where they're not going to be able to get top dollars because the market has crashed, or they're in a situation where they can't afford to make the payments anymore. Okay. So knowing your audience is super, super crucial. Okay. Super crucial in this business. Okay. And who is the audience? Well, the audience is anyone that's financially or emotionally motivated. Okay, someone that's financially or emotionally motivated. Okay, and in 2020, there's a lot of I guess it's not working, guys. All right, here we go. All right, in the 2020 economic class, there are a lot of financially motivated people. Imagine that 50 million people have filed unemployment in America and more to come. What's going to happen to these people's car payments? What's going to happen to these people's um, mortgages, right? Who's going to make these payments? Well, and if they don't make the payments, what's going to happen? Now, a lot of people are not going to be able to afford their payments. And that's where the opportunity comes into play for me is that majority of sellers not going to be able to make the payments. They already got the mortgages. They've been paying on it 5 years, 3 years, whatever. They paid all the interest that's going to be coming off the amortization. Where when I take it over, the payments I make are going to go more towards the principal reduction. Now, it doesn't matter if I'm buying it for myself or my rental, the same idea is the same, that the payments that I make after the seller owns it for 5 years or 6 years, more of it is going towards principal reduction, which is the debt balance, versus the very first few years when the seller owned it, because the very first few years, all the payments they made went towards interest. That's the scam of bankers. It's called amortization. If you don't know it, man, you better check it out. They get you a lot of money through the amortization. Okay. That said, guys, I think I'm going to get out of here. It's been quite a while. If you need more information about OPM, check out mrnofluff.com. I have tons of videos, tons of training, free videos on subject to owner financing, where the seller becomes your bank. If you're looking to find what the sellers are, how to give offers, how to talk to them, how to negotiate, how to have your own website, I have everything at mrnofluff.com. Check it out. The biggest sell of the year. And if you're looking to learn how to talk to sellers, how to do cold calling, role play, download my Ninja phone script. I got two left at 197 versus the 1250 that I normally sell it for. Just two left. Thanks so much. Click the like button. Share this message because there's tons of people that are going to try to buy homes and they can't qualify. And I want to teach people how to be their dreams. Peace.